Happy New Year. I hope everyone had a happy, healthy New Year, and it is a new year for the markets, a new year for Apple. And we all know last year that Apple did have a decent year percentage-wise, but it came well off the highs. From September 21st, the 700 highs all the way down to, the dangerous zone of 500 coming into the last week of the year. It wasn't easy for Apple investors, and even Apple traders, the most seasoned traders, had a hard time navigating, trying to play bounces, trying to reshort it. And, the question is, what kind of Apple are we going to have this year? A lot of people are saying the reason why it sold off was for tax loss selling. Some people were saying some hedge funds, went out of business. They had to sell. Then you had the iPhone 5 supply constraints and also the iPad mini constraints. There was a lot of reasons why it came off, $200 or so from the highs. Now that's behind us. The question is, what can we do with it moving forward? Is it an investment? Is it a trade? Is it a swing trade? So right now, if you take a quick look at the chart of Apple, you will see that there were some topping signs coming into September. You had this head and shoulders top with the left shoulder, the head, the right shoulder building. You had a trend that was in place from 2 quarters ago when it was following the 8-day moving average and the 21. And when it broke and closed below the 21-day, that was a sign to sell some. And then from there, it showed relative weakness controlled by this 21-day moving average all the way down to the low. And there were some trades along the way off moving averages. You had a nice red dog reversal also here November 16th that gave you somewhat of a tradable move before coming into bigger resistance. Then remember, dangerously came all the way back down. And then from there, tried to reverse, was negated. Tried to reverse here, was negated. And finally, you had this descending channel. This was what I was watching going into the end of the year. I wasn't sure, would we break 501 to 505 and continue lower, which could have happened, but it didn't for now. So we need to see. So we broke above this descending channel. We reclaimed the 8-day moving average. We gapped up yesterday. So from about 510, 515 to 555, really nice move. So now the question is, can it hold higher? Can we see commitment? So if you take a look here, I'm going to go still day by day with this. I'm still long. What I think could happen here is if we could stay above this 541.63 for a little period of time, I think we can continue. We have a trend line coming in from that September high that also comes right into here, which is more of a macro trend line, which also goes with the 50-day. So here is your, just say your buy area. Here was you take some off and trim. And now if it could hold higher here, I do think with some time, we will be able to add more above 555. And then the next obstacle will be to reclaim the 50-day. And then you have the 200-day. So there's a lot going on here, a lot of resistance in the way. At this particular point, let's take it step by step. Here is your gap pivot. Sometimes it could push below, but as long as it closes back above it, I still think it's in the game. But any close below this pivot, I do think people are going to say this was a day and a half wonder. Be careful. So at this point, let's see some commitment. If you're an investor, just again, I think that you got rattled enough last year that you know that you need some kind of hedge protection, whether it's a collar, whether it's puts, whether you sell calls after moves. If you're a trader, sometimes it's level versus level for so paper cut, so to speak, versus a gusher, because those who just bought and closed their eyes on the way down, they might not have been able to hold. For me, it's a new year. Let's see if it trades differently, which would be holding this gap, going sideways, and then taking 555 out. That'll be on my radar. And then I think earnings are, the 3rd week of January. We'll see where we are into earnings to see what type of strategy we'll have then. But between now and then, there'll be a lot of cash flow trades. And let's hope that we could stay with it and see higher prices. If we don't, we sell it and we move on. Have a great day trading.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.